Hello, learners. Welcome to today's segment, continuation of our practical paper. Recalling our last class, we had looked at question number 24, which was literally aspect to do with loan amortization, right? These are what we talked about in our previous class. Now, today's class, I want us to handle question number 21. Question number 21, this is what I want us to handle. Right? So these are what you're told in this question of powers that the following data was provided by Tusawa Limited. So what you are given here basically is the budgeted income and expenses for 2023. These are budget, actual income I'm given at that point. That is actual income and expenses for the months I'm given at that point. Required, we are told we are supposed to prepare the budget versus actual income statement for the 6 months ending 30th June 2023. Number 2, calculate the variance and percentage variance for each line item and indicate whether it is favorable or adverse variance. So whenever you're talking of each line item, say for example, if it is marketing, it should be marketing difference. If it is at all other, it should be other difference. Literally, that is what you're looking at here. Then we're supposed to prepare a dashboard visualizing the information above. So first thing that we need to do is to understand that basically this can either be under management accounting or tax. So what we will be requested to have here in mind is the knowledge of our budgeting, knowledge of budgeting. But because the good examiner here has almost summarized almost everything for us, our job will just be a matter of copying and pasting. That is what our job will be. So literally, these are what will be requested to have. Will be requested basically to prepare this budget for the 6 months. So what I'm going to do, we can copy this in our different Excel workbook so that you can work it out effectively. So Control New, I paste it there so that as at the end of the day, I should take you to this new workbook that we've created. So zoom it in. So literally these are what you are given, okay? So our task here would be to prepare, first of all, our budget, comparing, or rather our income statement. Our income statement will literally be comparing our budget and the actual data, budget and actual. This is what our income statement will be comparing. For each line item, which line item do you have for income statement? What you can do, I'll just copy paste this here. You see, this is our income statement, right? Probably up to savings. So I'll just copy paste this one here. I'll just copy paste that one here. We have it at that point. So our main task, remember we are given different months. So what you can literally do here is basically, other than us doing it on a monthly basis, which you can basically do it, but that will be kind of work won't be kind of well arranged, because remember we'll have to do that, then we determine the total. So easily what you can do, we can come and add our drop down list here. Do you know how to add our drop down list? So talk about months. On months, we add our drop down list at this point, which should be much easy. You just come to data, you come to data validation, we come to data validation. In our dialog box here where we have value, I click list, then our source. Basically, we want to look at which range. Basically, we're looking at our period. So I'm going to select that period of hours up to June, then we do OK. So once we have this, these are what you're going to realize. Once I have that in mind, just be, if I select this, it will give us the months that we are looking at. If I need January, if I need Feb, literally it will give us the months that you're looking at, right? So we start by working out our incomes. We're having sales revenue. So for sales revenue, budget, these are what you are given. So other than us basically copy pasting, how can you do it like on a monthly basis, like you put one by one? In this case, what you can do is to use the index match function. Recall the index match function. Index match function, whereby I'll just do index. These are some of the things that I taught you guys. So we have in index our array. Our array, basically, data array is the whole of this data that we want to compare, right? The whole of that data. So I'm going to lock it. By lock, you just do F4. Then I do comma. Now I want to introduce match function so that this data can be linked. So I'm going to do match function. Match function, I'm having match. The lookup value, what are we looking at? I want to look at, these are the values that we'll be looking at because these are our line items. So I want to look up our sales revenue. So I'll do my sales revenue, I do comma. The lookup array, where is that data of ours coming from? The lookup array is simply, my good student, of course, it is on the whole of this data of ours. It is on the whole of this data of ours. Literally, this is our lookup array, right? Then I do what? Basically, not the whole of that data actually, because it is a specific item, right? So in this case, what have we done? Sorry for that. I just do it quickly. Index match. So index array basically is the whole of this set. So they skipped escape. Is the whole of this bit. So I just take the whole of this data set of ours. I lock it up by clicking F4. Then I do comma. Our match function here. Our lookup value is sales revenue, right? Comma. Our lookup array. Where is this sales revenue of ours? Our sales revenue of ours simply is located here. These are lookup array. Not the whole set of data, but this is where our item is located in this area here, right? So I lock it up because it will affect all these other elements. I do comma. In that case, I need an exact match. If it is sales revenue, it should fetch for us sales revenue. So that will be exact match, which is 0. You see the 0 here? So just do 0, then you close that. Then you do comma. I need now to match our periods. Matching our periods, we insert match function. Lookup value. What do we want to look at? We want to look at our period, which literally here basically is the months. Basically, I can lock this because you'll find that it is a list. Then comma. Lookup array. Where do we want to look this data from? We want to look this data basically from the period here. You see the period? These are the periods, right? Then I lock it up so that as at the end of the day, in that case, we do exact match. I want it to be fetching for us the exact value. If it is January, it should be January. If it is Feb, it should be Feb. So exact match. Then I close that. Then we close that. Then we close that. Enter. So literally, what we've done here, we've commanded our Excel to guide us or to be picking the item under each period year. If you can come January, you see January is sales revenue is 2,200, right? If I can select another period, say like I select, say like April, you see it will just fetch for us. April, you come and confirm. April is 3,000. If you want for June, the same procedure will apply. You just pick, pinpoint, you just pick your values there. So literally, that will give us our budget data, which what you can do, I can copy this one all through up to the last bit. You can copy that up to basically up to that point. Yeah, and A basically is where we don't have any data. So you can agree and say that our total revenue in this context, that is our total revenue, right? Our total expenses, alt equal sign, I do it from here. So this will be our total expenses. That will be our total expenses. If at all you want our savings, I'm having savings the same as revenue, our total income minus total expense. So that's the budget data that we have prepared, right? That's the budget data that we have done, what we have prepared. So once we have that in mind, we now prepare, because you'll find that, see this magic, if you change for January, our data is changing. If you change for Feb, our data is changing. If you change for April, basically our data is changing, right? So that is literally for budget data. What about our actual, my good students? Actual data, this is where we had our actual data. You see how our actual data is disorganized? Where in that case, if at all I was to go to salaries, you'll find that salaries has been spread all over here. If I was told us to go to interest received, it is spread all through. So in this case, index match will not be an ideal function to prepare our summary. What you can do, we will be using what? The sum ifs function. Recall our class for sum ifs function. I guided you guys on sum ifs function. Mwalimu guided us on sum ifs function. So in this case, what we'll be having, let us introduce that function. Sum ifs function, comma. Our sum range will always be the total values. So you go to our actual data, our total value is literally this. So basically, I'll select that data set. Then I lock it up by clicking F4, comma. Our criteria range. First of all, we want to select our sales revenue. So this sales revenue, where is it allocated in this range of hours? Our sales revenue in this range, literally, our sales revenue here is somewhere here. It is located under category. So I'm going to select that category, Control Shift down, so that I have that category of, literally over our categories, right? Where our sales revenues are located. So I do F4 to lock it up, comma. What is our criteria? Our criteria here is the sales revenue. So I'm going to select the sales revenue there. That is our criteria, our sales revenue. Basically, these are the details of the items that we'll be having, where we started with the sales revenue, right? I'll do comma, my good students, I'll do comma. Criteria range number 2. Criteria range number 2 is the period. I want it to say like, this is revenue for this period. So that will be your criteria range. I'll go to our data set here. We pick our period. Our period, literally, we have our months here, right? So Control Shift to give us all through. So that once we have that, remember this is our, we'll have to basically amend the date. The date was general. It's only that I had our figures literally in values. So months there, then I lock it up by clicking F4. Criteria number 2, we say that criteria number 2 basically is our period, right? So I'll just do what? Our period. You see the period where we had our period here? So I'll come and select our period because it is in list form. I can as well lock it up. Okay. So once I have that, I can literally close our data there. So that in this event, once we have, of course, I can drag this all through. I can drag this all through up to that point maybe. So my total revenue, total income, actual, total expenses, actual, our total savings, actual. So you see what we've done, we've basically prepared our data in that case where I'm having it arranged neatly, where I can get a clear comparison. If it is, say, for the month of January, you see it is giving us, I've automated our data. For the month of March, I've automated everything here. For the month of April, we have all our set. We are set, we are good to go. We have automated everything. You can make it to be very presentable. Maybe in this case, maybe you can decide to use a different color, say like that bit, just to make it presentable. But in your exam situation, you don't need to do all this, right? You don't need to do all this. In exam situation, you don't need to do all this. I'm just doing this basically. I need it to be presentable in a way. Now, after that bit, we are done with actually part A of the question. Part A, the examiner wanted us to do what? Part A here, the examiner wanted us to basically prepare. Remember this were our days. So I've kind of they have come like this simply because you can have them in date format. Remember we had our values in we had all our values literally in values. So maybe I can convert these to dates. So we have it as part of our date, short dates. Yeah, short dates. So you can have it like that. So in this context, once we have that, we're trying to prepare the budget versus actual income statement for the 6 months. So literally what you've done, we have prepared that for the 6 months here. We have prepared that for the 6 months, where in this case, of course, you just be selecting. You just be selecting. You just be selecting here, which is okay. So the other bit, the examiner wants us to determine our variance. You'll find that variance would be quite easy. Our variance, so I can extend this branch here. This is variance that you're looking at. Variance. Our variance. Our variance will literally be very simple. Why is Mwalimu saying that our variance will be simple? Our variance will be simple because what I'll be required to do is just to compare our budgeted, right? To compare basically our budget minus actual, and because this one is revenue, we can multiply by -1 so that where I'm having negative should give us positive because it is literally our revenue. So I'll just have it at that point. So this is basically the interpretation, like for this period of hours, like for this period of hours, sales revenue, budget, we had budgeted to earn 3,000, we ended up earning 3,000. So there's no variance. Interest received, had budgeted basically to earn 500, but we ended up earning 708. So I'm having a variance which is favorable. I'm having a variance which is literally favorable here. I'm having a variance which is literally favorable. So once we have that bit, you will find that once I have that, I can proceed to if you change your period here, you can always see our variance will also be changing. Our variance will also be kind of changing. We've literally automated everything here. We've literally automated everything. Come to our expenses. Expenses, that will be simple because what I'll be doing, just comparing now our budget minus actual, that one will just be straight. So this one is like this is favorable. This is adverse. Adverse, the reason why you're saying it is adverse, you had budgeted to spend 1120, but you ended up spending 2240. So you spend more than what you had budgeted. So it was against you. The actual results was against you. The actual outcome is not as what you had anticipated it to be. So in this case, I can drag this one all through. I can drag up to basically, of course, all through, literally. Because the other one is a profit. The other one is a profit. That concept will apply with revenue. The concept basically will apply with our revenues. So I'll be having our revenues there. So the beauty of what we are doing here, the beauty of what we are having here, you will find that if we change our period, say June, you see I'll be having for June. If we change for April, you see I'll be having for April. If we change for Feb, literally I'll be having for Feb. So that even if you're to prepare our data, you can literally have that and copy paste on a monthly basis. If you want to have on a monthly basis separate, you can come have January, you have your data, you separate and indicate like that all through, right? So in this event, after we have determined our variances, the other item that we are required to do is basically to determine the percentage variance, right? It's basically to determine the percentage variance. So how will we basically determine our percentage variance? That would be very easy. Percentage variance. So I'm going to extend this one here. We have percentage variance. Percentage variance, this would be, we are looking at percentage variance here. This is where we are looking at percentage variance. So percentage variance, the same concept we just apply. We are going to take literally what we have here. So instead of division, basically I'm going to have what? Instead of minus, I'm going to have division, like that. That is literally, let us have it in this manner. I just do it at once. So I'll be having budget divide by actual, because it is a percentage, I deduct 1. And because I want it to be, it is an income, what you can do, of course, this one you multiply by -1. This one you multiply by -1. So that this should be our income variance percentage. If we want for aspect to do with our expenses, literally this one will just be as easy as taking budget, we divide by actual -1. I copy paste this one all through, right? So for revenue, it will just be the same. I'll be having for revenue like that. Then remember, all these are in percentages. So what I can have here is literally in percentage. So I'll just do percent. I'm having our data there. we are having our data here. So this is our percentage variance, and literally this is our variance, right? So we basically compared our variance, which if at all you can take whichever period that you're having, you see, our data will be changing automatically. Our data will be changing automatically. Our data will be changing automatically. We've automated everything here. We have automated everything here. So once we have that in mind, maybe you can go ahead, though you're not asked, but you can put a conditional formatting here, whereby, remember the conditional formatting, where we can have basically this and say, we set it in a way like if it is a conditional formatting, if it is a negative, so that if it is adverse, it will give us a different value. If it is favorable, it will give us a color. So basically, you're having conditional formatting here. Maybe you want to set, or rather set our rules. So if less than 0, it should give us what? Maybe green field with dark gray, or red text, or a red border, or we can just set any. I can select that literally, so that at any given point, whenever I'll be having this color will literally give us what? Adverse variance. So that if I come, in this case, you see, that will give us basically adverse variance. Where I'm having red, that is literally adverse variance. But if I'm having a favorable variance, it should give us green. So therefore, I'll be having here our home conditional formatting, highlight sales rules. If greater than 0, then I should have our text be in dark green text. So green will basically refers to favorable, red will refer to adverse variance. So in this case, what we can do, you see, if you come here, say in the month of Feb, green, basically all these are variances, favorable variance green, red is adverse. April, adverse, favorable. June, adverse, favorable. You see how easy it is. So literally, these are what we should be having. Literally, this is what we should be having. Now, I think we've answered the other question, which the examiner wanted us to answer here, which is basically question number 2. Calculate the percentage variance for each item and indicate whether it is favorable or adverse. I've clearly stated there how to identify adverse and favorable. Now we need to prepare our dashboard to visualize this information. So preparing our dashboard, things will be very easy, my good students. And how are we going to prepare our dashboard? These are what you're going to do. So let us start by our revenues, or rather this is our income. So I'm having this data files, income. I can just insert here directly. Maybe I can come to recommended charts. Recommended charts was the best chart for that. This will work. So this is our chart. Recall, you can always amend our chart. So chart title, basically here, this is budget versus actual incomes or revenue, right? So I can basically have it at that point. Maybe I'll probably need a color. I'll fill this with the different color of my choice. Assuming I need that, and this one you can fill it with a different. This is now basically formatting the way that you feel it will be okay on your end. Maybe you can have that. In this case, what about if we fill this with red, blue, yellow? Assuming that case, I can literally come and remove that. I can as well increase our gap width, or rather reduce our gap width at that point. What else can we do? We can literally come and remove this bit, and instead we add our data labels. We can add our data labels here, so that once I have that, I want you guys to see this magic. So maybe in the event that maybe I want, say, like for the month of January, you see, everything has been automated. For the month of March, our data has been basically automated. I've come up with a dashboard, a very simple dashboard. For the month of June, you see, everything has basically been automated. Everything has basically been automated. So in that case, maybe I can also want to prepare, say, for expenses. I'll want to prepare maybe for expenses as well. So for expenses, the same case will apply. In this case, basically, let me change the design. That design is not pleasing my eyes. So you can come change our design. Design will work well. I can use that. Use that design. This one you had it in yellow. This one you had it in red. Yeah, somehow this design on my end is okay. You can always select your design. So after that bit, maybe you go to expenses. Expenses, the same case. I want budget versus actual. So I'll select budget versus actual, that data. Then I pick this one. Insert, I come to recommended. Because they're expensive, I think you can use that. So literally on this end, chart title is important. So you can basically come and copy paste this one here. These are now expenses. These are expenses. Is this chart pleasing your eyes? I don't know. That one depends with you, right? So literally I can format it by increasing the gap width here, reducing the gap width. Maybe up to that point, I can decide that, you know what, maybe I need maybe a different fill. Maybe I need to fill this with, I can change it to, say, like blue. The other one, I can leave it to be that color. If it is pleasing your eyes, I can literally come and decide that I don't want that. what you can add here instead maybe is call outs. Actually, you're done. What you're doing is just a matter of literally formatting call outs that won't work efficiently. It will congest our data. Maybe we add data labels, yeah, like that. The same case, you can come and add our data labels like that. At least our works look neat. This design is pleasing you, of course you can go with that. On my end, maybe I can decide to go with a different design, which in this case I'm not sure which one will I take, but we have several. Yeah, black is always very catchy. I decide to go maybe with but if I go with black, I'll have to change some colors, right? So if I will go with that, I can decide that you know what, I want this to be, say, like to be filled with blue. That one I can leave it like that. Just see how your data is. So that this case, imagine even if you're an examiner and you've seen a student who has presented his work in this manner, surely will you not give him full marks? Like if at all I was to pick a specific period, say like see how we've automated. You see our data is just changing. Maybe I want to say like Feb, you see, maybe I want to say like April. Our data is just changing. We've literally automated everything. So we've prepared our dashboards, we prepared our variances. We've done everything that the examiner wanted us to prepare. See, we've done everything that the examiner wanted us to prepare. So literally, this is how we can work out the concept of variance, budget versus actual, as well as coming up with our dashboards. Yeah. So these are what basically we will be required to do or prepare. So that point, guys, thank you so much. We meet in our next class, whereby in our next session, we are going to handle this question number, we can do question number 22. We can do question number 22 in our next session. To that point, thank you so much. Let us meet in our next session. Thank you.